So earnings per share is calculated as earnings attributable to ordinary shareholders. That is profits, then we less preference shares dividends. Profits we less preference shares dividends. The dividends, if it is relating to irredeemable, all the preference shares dividends, we less it, divided by number of ordinary shares. That is a basic calculation of earnings per share. So number of ordinary shares. So this is the basic calculation of earnings per share. This is the basic calculation of earnings per share. Earnings attributable to ordinary shareholders, all divided by number of ordinary shares. But what normally happens is that, you see, some of the ordinary shareholders will be from the start of the year and they will be there at the end of the year again. But some people will come during the year, which will be a mid-year to the end of the year or a quarter to the end of the year. Assuming two of us started a business from January to December, and one person came in June to December. If we are sharing these profits, are we all going to receive the profit equally?
No.
What will happen?
The second person will get for 6 months, and then the first person will get for the whole year.
Okay. So assuming that the entity has 2,000 ordinary shares at the beginning, and from July, they issue 5,000 ordinary shares. From July to December, they issue 5,000 ordinary shares. Let me put 5,000 ordinary shares. Okay. They issue 5,000 ordinary shares. If we want to pay dividend for the full year, would the 5,000 shareholders also receive the dividend for the full year? If you want to pay dividend for full year, are they going to receive dividend for the full year, the 5,000 people?
No.
They'll receive how many months?
6 months.
From July to December.
Okay. If we are sharing the earnings per share now, the people that have the 2,000 will receive a full year earnings per share, but the people who came in July will receive only what? 6 months, isn't it?
Yes.
By implication, we are saying that these 5,000 people only contributed 6 months to the profit for the year. These 5,000 shares only contributed 6 months because they came in July, so they contributed only 6 months to the profit that we are sharing. But the 2,000 was there already. The 20,000 was there from the beginning, so they contributed for a full year. So if you are going to share it, the 20,000 will get all. But if you want to share the profit will be given half. It's only half of this that was contributed to the profit. So the shares that contributed to the profit that we are going to share will be only what? 2,500. So for the full year, what will be the total shares in terms of dividend distribution, in terms of contribution towards the profit for the year? What will be the total shares that contributed to the profit that we have for the year? What will be the total shares?
22,500.
22,500. So this 22,500 will be the one that we use for the earnings per share. So if our earnings for the year was 10,000, our earnings per share will not be 10,000 divided by total number of shares. No, because the 5,000 only contributed 6 months to the profit. So they have to be given 6 months. So we find half of the 5,000 shares. So this will be 10,000 divided by the number of shares that we use that contributed to the profit that we are sharing. And this is what we call weighted average number of shares. The 22,500 is the weighted average number of shares. That is basically an idea about the earnings per share. So what would be our earnings per share for the year?
How did we get the 22,500?
We have 20,000 shares there at the beginning. They have been there for the full year. Then from July, 5,000 people came. They contributed only 6 months. So 6 months of 5,000 is 2,500. But we have 20,000 from the beginning. They have contributed full year. So the 2,500 will not add to them. That will be the total number of shares that we have.
Okay.
Are you okay now?
Yes, sir.
So what will be our earnings per share? What figure we have?
0.444.
Okay, earnings per share is always calculated in the lower denomination of the currency. So you change this one to pesos. That is in cities. So change it to pesos by multiplying by 100.
$44.4444.
So that will give us 44.4 pesos. Are we there? So this is how we calculate earnings per share. This is the idea about earnings per share. So the earnings per share we are going to look at now is the earnings attributable to ordinary shareholders divided by the shares that contributed to the profit that we are sharing, which we call the weighted average number of shares. All right. So if the profit was 10,000 and the shares at the beginning was 20,000, the earnings per share will be 10,000 divided by 20,000 because the 10,000 shares contributed towards all. I can hear myself talking, so the person should. Okay. So if you want to calculate the earnings per share, ask yourself, the shares that you are going to use, has the shares been there from the beginning to the end? Or all the shares I'm going to use, have they all contributed to the profit I'm going to share per over them? If no, then you look for this shares has been there for how many months? This shares has been there for how many months? Then you try to prorata them, find the portion that they have been there. Then you use them for the earnings per share. So that is basically the idea about the earnings per share. Let's look at how the shares can be increased in a year. If the share at the beginning is 20,000 and the profit is 10,000, it doesn't mean that the shares will be 20,000 forever or from the beginning to the end. There can be some issue of new shares within the year and the share will increase. So let's look at what are those things that will cause a share to increase over a period or during a particular accounting period. The first one is issue of shares at a full market value. If they say issue of shares at a full market value, we are talking about you having issue or you issuing a new shares during the year. So you issuing the new shares during the year, and that is what we have looked at over here. That is how we have looked at over here, which is the 5,000. This is a new issue. From which date? July. That was 6 months. So we find 6 months of holding this one, add it to the shares that we have at the beginning. Then we use that for the earnings per share. So an issue of shares at a full market value brings additional resource to the entity, but impact on earnings is only from the date of issue. Therefore, the number of shares are time apportioned. So this share only contributes 6 months to our profit. So we should only find the 6 months of the shares and use it for the earnings per share. That is what they are saying. Let's look at example 1. Who is reading for us?
A Limited has an earnings of 300,000 during the year ended 31st December 2016. On January 1, 2016, A had a share capital of 100,000 Ghana cedis, 100,000 Ghana cedi shares. On March 1st, 2016, a further 60,000 shares were issued at 3 cedis 25 pesos per share. Calculate the basic earning per share.
Okay. Okay, before we start, earnings per share is divided into two portions. We have the basic earnings per share and diluted earnings per share. So we are looking at the basic side. We come to the diluted side. All right. So what was the share that they have from January?
From January, they had the 100,000 shares.
100,000 shares, isn't it? And this contributed to full year because January to December is full year. So this year has contributed to the full year profit, isn't it? The new issue was done on what?
On March 1st, 2016.
On March 1st, 2016. So before the new issue was done, we have already done what? We have already done what?
3 months.
Is it 3 or 2?
2 months.
We have already done what? 2 months.
2 months.
So it means that these shares have contributed to only 10 months of the what? Of the profit. And this shares is for full year. So what do? We need to find our shares that is for 10 months. So what we do is that if you want to find the shares, which is the weighted average number of shares, I will show you two ways of doing it. Weighted average number of shares. The first one is you look at the shares in issue. Shares in issue. The share in issue was how much? The beginning share. It was 100,000, isn't it? Okay. Or shares at start. Or you can say share in issues at January, anyhow you want to put it. The new issue will now contribute only 10 months. So how do you find it? It is 10 over 12. 10 over 12 times the number of shares, which is 60,000. Am I correct?
Yes.
How much are you getting?
50,000.
Is it?
50,000.
50,000. Okay. So what would be the total weighted average number of shares?
150.
That will give us 150,000. So this is the number of shares that we use for the earnings per share. Okay. I'll also show another way of calculating the weighted average. My Excel sheet is full. Okay. So if you want to calculate the earnings per share, let me do the earnings per share first. What is the profit for the year?
300,000.
300,000 divided by the weighted average number of shares is what?
150,000.
150,000. So what will be the earnings per share? 2 cedi per share. Okay. If you have the answer to be a whole number in cedis, leave it. But if it is decimal, that is where you change it to pesos. All right. Let me also show you how we can calculate the weighted average number of shares in a different way. But this particular way sometimes is confusing. So just do the one. What was the total number of shares over there? Or how many shares have done the full year? Separate them. How many shares have not done the full year? How many months have they done? You calculate the month, then you add it to the shares that have done the full month or the full year. Then that is your weighted average number of shares. Another way of doing this is that before the new shares were issued, the 100,000 has done how many months?
12 months.
No. Before before the new shares were issued, the 100,000 has done how many months?
2 months.
2 months. So we find the shares for the 2 months based on the. So the shares in issue will do only in 2 months. So let's find the number of shares for that 2 months. It will be 2/12 times 100,000. How much are we getting?
$16,666.67.
Do it to the nearest one. That will give us 166.7. Are we correct? All right. So from March to December, what will be the total number of shares that we are going to have?
$160,000.
100 and what?
60,000.
50,000. And this will do how many months? 10 months, isn't it?
Months.
So we do 10/12 on the full amount, which is 150,000. What are we getting?
160, not
Okay.
150.
So 160,000. How much are we getting?
133.
133.
133,333.
Okay. 133,333. Let's put the two together and see what we are getting.
$150,000.
Okay, that is also another way, but this is too long. This is too long. Just I normally recommend the first one.
Oh,
The shares from the beginning will do full year. So put them over there because they have done full year. What was the share that were issued after? How many months have they done? You calculate it and add it to the shares that you have from the beginning. That is all. All right. Let's look at let's look at the question, example 2. Then we move on to another one.
The company issued 200,000 shares at market price of 3 cedis on July 1, 2016. There was no issue of shares in the year ended 31st December 2015. Relevant information. Profit attributable to equity shares for the year ended 31st December 2016 was 550,000. And then 460,000 for 2015. Number of equity shares issued as at 31st December 2016 was 1 million and 2015 was 800,000. Calculate the earning per share for the year ended 2015 and 2016. 31st December.
Okay, let's do 2015 first. The 2015, the question said there were no issue of shares in the year ended 31 December 2015. So our earnings per share will just be the profits attributable to them, 460,000, divided by what?
800,000.
800,000. And what will be the earnings per share?
57.5.
6.
57.5.
Okay. So 7.5 pesos. Let's count to 2016. 2016. The 2016, how many of the shares? 2016, what is the number of shares that we have now? 1 million, isn't it?
Yes.
You can see that the 200,000 that they issue within the year, that is increasing the 800,000 to 1 million, isn't it? All right. So the weighted average number of shares the weighted average number of shares. Let me just put it to work. What we are going to have is that we have the old shares. The old shares will be how much?
1 million.
No, old shares before the new issue,
800.
800,000. So the old share will do a full year, which is 800,000. But the new issue now, the new issue will do how many months? The 200,000 will do how many months?
6 months.
6 months, which is 6 over 12 times. What is the value? What is the number of shares issued?
200.
200,000.
200,000. So what happened is that this 800,000 was from 2015. So it will be there at the beginning of 2016 to the end of 2016. But it's the new issue, which is 200,000 issued on July 2016. That is increasing the 800,000 to 1 million. But this 200,000 was not at the beginning of the year. So we can't use the full 1 million for the earnings per share. That would be a cheat because some people came in July and you are giving all of them dividends. No. You give them the dividends or the earnings based on the contribution that they have made towards the earnings. So they have contributed only 6 months. They have contributed only 6 months. That 6 months will give them only 100,000 portion of what? The share. And this will give us 900,000 because the 800,000 have been there from the beginning, so they will get a full year. But the people that came in, they are going to get only 6 months portion, which is the 100,000 shares. So the total number of shares that we are going to use will be 100,000. So our earnings per share will be what?
550.
It will be 550,000 divided by what?
900.
900,000. All right. So what will be the earnings per share? Eh. See ya. The light is on. But I can see that the net gear is on. Yeah. All right. So what will be the earnings per share?
61.1.
0.1%.
Okay, 51.1 what?
61.
0.1%.
61. 61.
61.
Yes.
Okay, 61.1 pesos. Okay. So that is it. If you like, you can also use the first method that we use, where the old shares will do 6 months before the new issue. So this will be 6 months. So this will do only 6 months, 6 over 12. 6 over 12 times. It's coming down. Okay. Then you have to go and visit. Okay. A minute. Can we move on?
Yeah.
So I was saying that we can do that. How many months has the 800,000 done before the new issue? It has done only 6 months because that will be January to June. So we do 6 months for this. Then we get 400,000. Okay. So we are getting 400,000. So our total shares from July will now be 1 million. And that will also do 6 months. So we do 1 million for all of this. And that will give us 6 months. And that will give us 500,000. And that will, the total will give us the 900,000. That is it. But me, I recommend what was the number of shares that were there, what was the number of shares that have done the full year, and what are those that haven't done the full year, how many months have they done? You find it and add it to the one that have done the full year. That is the weighted average number of the shares. So this is how we do if the shares are issued at a market value. This is how we do it. This is how we do it. Can we move on? I hope we can make a progress.
Yes.
All right. Let's look at when there is a bonus issue. Okay, Joyce. Joyce, your hand is up. Or it's a mistake.
Yes, please, before you continue, I'm not too clear. I'm not too clear with the, no, it's not a mistake. Hello, can you hear me? Hello,
Okay, thank you. Yeah, I can hear you.
please, I'm not too clear with the weighted average. Can you take it again?
When did you come?
I've been in for long.
You have been.
I joined for long.
Okay. So you are saying that if I can take you through.
Yes, please.
But the thing that you are asking me is you are giving me condition if I can. No. You are giving me options. I can say no or yes. And if I say no, you will be sad. Oh.
Line of take me through.
I know you will not say no.
Just say take me through. Take me through. Very simple. Can you take me through? You are giving me options which I can say no or yes.
Hey, Lion.
You say yeah, don't say no.
Yeah, bro, say yes.
You know, you see, the thing is just ask the thing the way you want it. Before we say no, then you say that, okay, I'm a bad person. But the way you are putting it as a condition, that if I say no, then you say that I haven't done it well, but you are giving me the condition. It's not fair.
Yeah, bro. Yeah, bro.
Let's move on. So we are saying that, what we are saying is that, Auntie Joyce, what we are saying is that two of you have started a business from January to December. Two of you have started a business from January to December. And someone joined you people from July. From July to December. If you are sharing profits, assuming you people are sharing the profits, you have made a profit of 150,000. Are you people going to share the profit among yourself, 50,000, 50,000, all things being equal? Auntie Joyce, are you going to share the profits 50,000, 50,000 among all of you?
No.
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 The person who came from January to December will
Yes.
get only 6 months portion of the profit, isn't it?
Yes.
Because
Yes.
the person contributed towards only 6 month profit, not the full year's profit. But you, the two of you that were there from January to December, you are going to have the share of the profit for the full year, the first 6 months and then the last 6 months, isn't it? All right.
That's it.
Yes.
Let's come here. You see the number of shares that we have over here. In 2015, there were 800,000 shares. These 800,000 shares will become opening shares for 2016, which will be there from January to December. If we want to share the profit, this 800,000 will take a full year because they have been there from January to what? December. But let's come to the 20,000 issue. They have issued a new share on July 2016, but we are calculating the earnings per share at 31 December 2016. That is, they have issued a share 6 months to the end of the period. So this 20,000, which is July, from July to December, which is 20,000. If you want to share profit, they can't take the profit equal to all the 20,000 shares. Would they do that?
No.
No, because they have
No.
contributed only 6 months. So if they are taking 6 months of this one, it means that they only take what? 100,000 share of the profit. Are you okay?
Yes.
So the total number of shares that contributed to the profit for the year was the 800,000 from the beginning, plus the 6 months that the new people contributed. And that will give you the 900,000 shares that we have as the weighted average number of shares.
Okay.
Auntie,
So-
Joyce, are you okay now?
When you, hello. So you take 6 months of the 300,000, then add it back to the shares
because
carry forward,
the
right?
800,000 has been there from the
Hello.
beginning, so they have contributed to the full year profit. They have to take a full share.
I'm not getting 90,000.
You are not getting what?
900,000.
It's supposed to be 900,000.
Okay, okay.
Are you okay now?
Thank you very much.
Are you okay? Auntie Joyce, are you okay so that we move on? Auntie Joyce, can we move on?
Hello.
Can we move on?
I'm okay. I thought you said 90,000. Okay, thank you very much.
Even if I'm saying 90,000, you know that it's not 90,000. So why will you take the 90,000?
Yes, I'm okay. I thought weighted average. We're going to do some division. That's why.
No, we don't do division. Are you okay?
Yes, I'm okay. But I'm saying that I thought weighted average should be some division.
You do some.
My name is bad. Thank you.
Auntie Joyce, I can't hear you. Are you eating?
No, now you should go on. Her network is bad, so I think you should go on.
Okay. So this is one of the ways that the shares, our ordinary shares can also increase. If there's a new issue, it can also increase the ordinary shares. Let's also look at another way of increasing the ordinary shares. The second one is bonus issue. Bonus issue. If they say bonus issue, what is the meaning? Or we call it script issue. Bonus issue or script issue. What is the meaning? Bonus issue or script issue?
That is buy one, get one free.
Buy one, get one free. That is no bonus issue. That is a right issue.
Okay.
The bonus issue, you don't pay any amount for it. We are just converting our reserves to shares. So the bonus issue has to do with you converting some part of your reserves to shares. So normally the return earnings. So what will happen is that if, the example, let me come here. We have return earnings of 20,000 Ghana cedis. Then, okay. So you have return earnings of what? 200,000 Ghana cedis. And you people need money. You need money to undertake a new project. You can't go there and issue new shares because you don't want to cause dilution in your ownership. You don't want new people to come that are not familiar with the operations of the company. If new people are coming, they might not be, or they might not have the same purpose that you people are having. So what you do is that, okay, we have enough reserve. Why can't we change some of our reserves to shares? So they will try to change their return earnings, part of their return earnings, convert it to what? Ordinary shares. That's what we do. But what happens? These return earnings were there from the beginning. So if you are now changing the return earnings to shares, we assume that the shares that you are changing the return earnings to have been there since, just that you haven't changed them to ordinary shares, but the return earnings has been there for long. So we assume that the convention has been done long time ago, but you are just trying to materialize it now. So for bonus issue, we don't do anything. Even if it is done at the end of the year, it will take the full year because the return earnings has been from the beginning of the year to the end. So if you are not changing part of the return earnings to shares, it means that the shares has been there from the beginning to the end. So we don't do anything like time apportioning the bonus issues. We assume that the bonus issue has been there from the beginning to the end because the return earnings has been there, the balance has been there, the reserves have been there from the beginning since. but you are now trying to change it to what? Equity shares. So we don't do anything like this has contributed this, this has, no. The bonus issue, we assume that the shares has been there since, because the retained earnings has been with the company for long. And the bonus issue has been done, but just that you are now trying to put it on paper. All right. That is about the bonus issue. So the bonus issue is changing part of your reserve to equity shares. It doesn't bring cash. There is no cash. But a situation where you have buy one, get one for free is what we call right issue. Right issue, where some of them will be on full market value and some of them will be on bonus. That is right issue. So a bonus issue does not provide additional resource to the issuer. It means that the shareholders own the same proportion of the business before and after the issue. In the calculation of earnings per share, the bonus issue are deemed to have always been in issue and therefore are reflected for the full period. The comparative figure are also restated to include the bonus issue. What are they saying that the comparative figure? Let's come here. Assuming our 2015, our 2015, 2016, okay, our earnings were 200,000 and 250,000. Our shares, number of shares were 40,000. 40,000. Okay. 400,000, 400,000. So in 2016, they said that the company has made a bonus issue of what? 100,000. What does it mean? It means that the bonus issue has been in 2015 too, because the same retained earnings has been in 2016. So if you want to calculate the earnings per share now, our earnings per share now will be the shares that we have before the bonus issue plus the bonus issue. That will be the total value of the shares now. We have 400,000 and we issue additional shares, which is true bonus issue, which we are that has been there because the balance on the retained earnings or the reserves has been there for long. So the bonus issue has also been issued for long. So we now have the 250,000 divided by 500,000, which is the shares that we have plus the bonus issue. This will give us how much? 50 pesos. Am I correct?
One was 500,000.
Who is asking the question? Let me see the name. The person should ask again. Sami,
Why 500,000?
that is Sami.
Yes, sir.
Okay. So we are saying that the shares that we have in issue was 400,000. But during the 2016, the company made a bonus issue of 100,000. So it means that our share value will increase by 100,000. We already have 400,000, and we are now changing part of our reserve to shares. It means that the shares will increase. And that reserve that we are changing is up to 100,000 shares. It means that for 2016, our value of shares will now be the 400,000, which is at the beginning, plus the bonus issue, which is what? 100,000. Are we okay? But bonus issue are made from reserves. The reserves has been with the company for long. So we assume that the bonus issue has been there, but just that they were not materialized. They are not put into books. So since the reserves has been there for long, the bonus issue has also been in the reserve for long. And this has also been we have been using the reserve also to generate profits. And now we are taking part of the reserve to now become shares. It means that those shares were also part of the reserve that we are helping us to make the profit that we are making for the year because the reserves has been there for long. So we add the bonus issue now to the value of the shares that we have before the bonus issue. That would be 400,000 plus the 100,000.
So it means a bonus issue is always made out of the what do you call it, the retained earnings, right?
Yes, we change the retained earnings now to shares. That is the bonus issue. We are changing part of the retained earnings. We are now reducing part of retained earnings. We are taking some portion of the retained earnings now to equity shares. That is the bonus issue. And the retained earnings is also part of the profit that we are keeping to help us run the business. And this retained earnings is also helping us to get the income that we are getting, because it's also helping us to carry our day-to-day operations of the company. So now we are changing the retained earnings, part of retained earnings, to shares now. It means that these shares that we are changing to, those values are also part of retained earnings that is helping us to run our day-to-day operations. So we assume that the bonus issue is there forever. It has been there since. So we don't do anything like it has been used for 6 months, it has been used for 4 months. No, we don't consider the time. We just calculate all the amount of the bonus issue. We go and add it to the shares that we have before the bonus issue, and that will give us the 500,000. Can we move on? Sammy, are you okay now?
Yes, Chief.
Okay. So for 2016, that will be Joyce. Auntie Joyce.
Yes, I've realized that from the weighted average and its bonus issue,
Yeah.
in all the questions will require that you should calculate earnings per share. So how will you know that you are doing weighted average or you are using bonus issue?
Why will you know that you are doing weighted average or
Bonus issue.
no? The weighted average is not anything, it's just a name that we are giving to the shares that we are going to use for the earnings per share. So if you want to do weighted average, what you do is that you can just multiply the bonus issue by 12 by 12. It will do full year, so 12 divided by 12. It will still give you the same value of the shares. So for bonus issue, we don't even do that weighted average. We don't consider time. It's just like you have your brother who has been working for you, and you haven't been paying your brother. Now you are saying that you have to start paying your brother. In actual sense, you have to start paying your brother from the time that he started working for you. The effect should take retrospective effect, because the person has been working for you. It doesn't mean that he hasn't been contributing towards what you have in your shop, the profit that you are making. It doesn't mean that he hasn't been contributing towards that particular profit, but just that you decide not to give him money. But if you now decide to give him money, it means that you have to give him money for all the time that he has been helping you to get the profit that you are getting. And that is how the bonus issue works. So the bonus issue, there is nothing like time apportionment. You take the full value, add it to the shares that we have before the bonus issue, divide it by the earnings for the year. All right.
So the time apportionment is the weighted average, right?
Yes, the time apportionment is, if you do it, that is where you get a weighted average.
Okay, all right, thank you.
Can we move on?
Yes.
Okay. So for the 2016, we are done with the 2016. For the 2015, our earnings per share will now be 200,000 divided by 500,000. Do you know why I'm using 500,000? Because we assume that the bonus issue has been an issue since, so it will affect the previous earnings per share that you have calculated. The bonus issue will affect all. So what you do is that the bonus issue was there from 2015, 2016 to, if you have 2014, the bonus issue, you assume that the bonus issue has been in issue 2015 because you have reserve in 2014 too. So any year that you have reserve, you assume that the bonus issue has been there because you are making the bonus issue from the reserve. So whenever you have reserve, the bonus issue has been there. That is it. All right, let's pick a question. But the bonus issue, they will not give you 100,000 straightforward like this. They will give you a proportion that the company made 2 for 5 bonus issue, 2 for 5, 3 for 5. That is what they are going to tell you. Let's look at a question. Example 1, senior.
A company makes a bonus issue of
one new share for every 5 existing shares held on July 1, 2016. Relevant information: profit attributable to equity shareholders for the year ended 31st December for 2016 was 560,000. For 2015 was 460,000. Number of equity shares in issue as at 31st December 2016 was 1.2 million. And then 2015 was 1 million. Calculate the basic earning per share for 2016 with comparative.
So the bonus issue, what is the proportion that they made a bonus issue?
One new share for every 5 existing shares.
Okay. When did they make it?
1st July 2016.
Okay. 1st July 2016. Okay. So it will be made on which of the shares? Is it 2016 shares or 2015 shares?
2015 shares.
2016.
or
2016. 16. 16.
It will be made on 2016 shares. The bonus issue was made in 2016. So let's calculate our bonus issue now. So it is bring the old share, 5 old shares that you have and count for new. So what we normally do is that it is the 1 divided by 5 times the number of shares that you have. So you are bringing 5 of your old shares. Bring 5 of your 1,200,000 shares and take 1 new. So how many of the old 1 million shares that you can bring, and you get your how many of those shares can you bring and take the new one? So if you want to do it, is 1/5 times the number of shares that you have. Okay, look at this. You see that the 1 million that you have over here, the 1 million that you have over here is including the bonus issue. It's including the bonus issue.
Yes.
So you can't do it on the 1,200,000. It will be done on the shares at the beginning of what? Of 2016. That will be 1 million. So do 1/5 times 1 million and see.
You got 200,000.
So it means that the question has already added what? The 200,000 to 1 million, and they have gotten 1,200,000. But mostly bonus issues should be made on the shares at the beginning of the year. So at the beginning of 2016, the bonus issue will be made on that particular share, and that share is the 1 million. These shares over here, we assume that they are at the beginning. Okay, number of equity shares in issue at 31 December. So this is at the beginning. It means that they have added the bonus issue to it already. But the bonus issue will be made on the shares at the beginning of every year. So it will be at the beginning of 2016. So the bonus issue will be 1/5 times the shares that you have at the beginning, and that is multiplied by 1 million. Okay. So we have 200,000. Let's count to the earnings per share for each year now. $2015 will be how much? The earnings for 2015 is how much?
460,000.
460,000 divided by
1.2.
it will be 1.2, because we assume that the bonus issue has been in 2015 to 2014 to the bonus issue has been there. So we now use the new value of the shares now, 1,200,000. What will be the figure that you'll be getting?
38.3.
0.38. 38.3 pesos.
So 38.3 pesos. If you're having 0 point, multiply by 100, change it to pesos. Okay. Let's count to 2016.
550
550
over
divided by
1.2. 1.2.
1.2. Okay. So that will give us how much?
0.46.
0.46. What is his pesos? Okay. Okay. Is it? Yeah.
Linus,
Yeah.
he said we should multiply by 100. Why are we getting 46 pesos?
Please, it's
Okay.
rather 45.8 pesos.
45.8. Someone
Yes.
said 46, so I had 46.
No, it's 45.8.
Okay, maybe the person is trying to approximate. All right. You see, this one, you can see that they have given us all the information. That is how we do it like this. Sometimes they will not give you the shares for the previous year. They will only give you the earnings per share. So what we normally do is that we use the bonus issue fraction to restate this. How do we calculate the bonus issue fraction? What we do is look at this. How do we get the 1,200,000 shares? It is the bonus issue. It is the shares that we have in issue plus the bonus issue, isn't it?
Yes.
Okay. Plus the bonus issue, which is 200,000. Are we okay? Okay. So if this is the shares that we have, then we assume that this is 100%. Then we now add the bonus issue percentage to it. Joyce. Auntie Joyce.
Hello? Hello?
Yeah.
Please, why are we dividing the 2015 by 1.2 instead of 100?
Please, I can't hear you.
The 2015.
The
2015, the number of shares, is it not 1 million?
No, we assume that the bonus issue has been in issue since. So it doesn't matter the year that they have done it. Since retained earnings was there for 2015, the bonus issue was also there for 2015. So
But they stated that it was on 1st July 2016.
But the bonus issue was made from retained earnings, but we have retained earnings from 2015, isn't it?
Yes.
So what is the assurance that the part of the retained earnings that we are using this year is only the 2016's own, not 2015?
Okay.
It can also happen that this year we are making a loss before we decide to make the bonus issue. It means that we are changing the previous year's reserves to shares now. So whenever a bonus issue is made, you assume that it has been there since. It has been there since. Even 2019, if they give you information on 2019, you go and adjust it because there was retained earnings or reserves in 2019. So we don't consider the time that it has been done. Since we are making it from reserves, the reserves has been there from the time that the company started. Unless they make profit for that particular year, which we say that the bonus issue hasn't been there because they made profit, so they can't make any issue from the profit, from the loss rather. Are you okay? So we don't consider when it is done. We don't consider the time. We consider the bonus issue has been in issue since. Are you okay? All right.
Okay, so it means that the 2015 figure, we are not going to do anything with it.
We're not going to
use it for any other thing in this questions of bonus issue. We don't use the previous year number of shares at all.
No. If you want to use it, then you add the bonus shares to it.
Okay.
The bonus share was 200,000. So if you add a 200,000 to that, that will give you 1,200,000. Are you okay?
Thank you. Yes.
All right. So let's come here. Let's assume that this is how we calculate the bonus issue. So what we are going to do is that this is 100,000. So that is 100%. Then we come and add a bonus issue. The bonus issue is supposed to be 20%. Am I lying?
That's correct.
I'm correct, isn't it? All right. 1
Yes,
over
please.
5 is 20%. So you can say that this, what we are having over here is 120%. That is giving us the 120 million. 120% of the 100 million that is giving us this. Okay, let's now reduce this one to numbers. We can say that this is 1, and this is 1/5. So how we get this is we add 1 to 1/5. If you're adding 1 to 1/5, put it on your calculator. 1 plus 1/5. What are you getting?
1.2.
1.2.
Which is 6/5. Is it 6/5?
Yes.
Okay.
Yes.
Use 6/5 to multiply 100,000 and see what you are going to get. $1,200,000, isn't it?
Yes.
Okay. Another way of we bringing the earnings per share for 2015 to 38.3 is we multiplying the earnings per share, the actual earnings calculated for 2015 by the reciprocal of the bonus issue fraction. The bonus issue fraction was 6/5. If you want to reciprocate it, it means that it will be 5/6, isn't it? All right. Let's look at the earnings per share. Let's look at the actual earnings per share calculated without a bonus issue for 2015. This would have been 460,000 divided by 1 million. How much are we getting?
0.46.
0.46. So since now we know that there is a bonus issue, we come and multiply the earnings per share without the bonus issue by the bonus issue fraction, which we multiply by the reciprocal. The top will now come down, and down will now come top, which will be 5/6. What are you getting? Multiply this by 5/6 and see.
0.3833.
Okay, 0. So that will give us 38.3 pesos. Am I correct? All right. So
Yes.
sometimes the question will not give you the shares for the previous year. They only give you the bonus issue calculated without. They only give you the earnings per share calculated without the bonus issue. So you have to now find the bonus issue fraction. If you want to find the bonus issue fraction, it is 1 plus the manner in which the bonus issue was done. So if it is 142, then it will be 1 plus half. Then you get it on a calculator. Then you reciprocate it, you turn it upside down and use it to multiply the earnings per share calculated for the previous year. That's how we do. Let's look at example 2. Yes, example 2 will tell us more about that.
At April 1, 2015, D Limited had 7,000,001 Ghana ordinary shares in issue. It made a bonus issue of 1 share for every 7 held on 31st August. Its earnings for the year were 1,150,000. These earnings per share for the year ended 31st March was 10.75 Ghana pesos. Calculate the earning per share for the year ended 31st March, together with comparative earning per share for 2015. That will be presented in the 2016 account.
Okay, the comparative that you're talking about, they're just telling you that assuming the bonus issue was considered for 2015, what should have been the actual earnings per share? That is a comparative. So you now adjust it. You can see that they haven't given you the earnings for 2015, but they have given you their earnings per share, isn't it? Okay, let's look at example 2. The first thing that we do is that we calculate the earnings per share for the year that they are asking us to do it for. So that will give us 2016. So the 2016, in what manner was the bonus issue done?
Is that in what manner was what?
One for every 7.
One for every 7.
So how are we going to calculate it? What will be the bonus issue?
1 million.
1 million.
No, it will be 1/7 times what?
7 million.
Okay, okay. Me, I'm seeing 1 CD over there. 1 CD. Okay, 1 CD is a figure. So that will give us 1 million, isn't it?
Yes.
Okay, so the total number of shares that we are going to have for 2016 will be what?
8 million.
That would be 8 million. Am I correct?
Yes.
Okay. So our earnings per share for 2016 will be the earnings divided by the total number of shares, which is 8 million. How much are we getting?
14.38.
14.38. Okay. You see, another way of calculating the 8 million is this one.
Hello.
Another
The earnings provided for 2016.
Okay, another way of calculating the 8 million straightforward. Another way of calculating the 8 million straightforward is to add 1 to the bonus issue fraction, which is 1/7, isn't it? So 1 plus 1/7, what are you getting on your calculator? It's supposed to give you 8/7. Is it giving you 8/7?
Yes.
So 8/7 multiplied by the shares that we have in issue before the bonus issue. How much are you getting?
$8 million.
It's supposed to give you 8 million, isn't it? All right.
Yeah.
Let's count to 2015. 2015 is we will come and restate the 10.7 pesos calculated. The bonus issue was not taken into consideration. So what we do is that we multiply this by the bonus issue fraction, the reciprocation of the bonus issue fraction, which is 7 divided by 8. How much are you getting?
12.23. 12.23.
It's 12.
Yes.
No, 7/8. 10.7 times 7/8.
$9.36.
9.36. Okay. You see, this is the easiest way. Another way of doing it is that you can ask yourself, if the shares that we have in issue was 7 million at the beginning of this year, it means that the shares that we have in issue last year too was also 7 million. Okay. So let's now find if our earnings per share is 10.7. It means that if you want to find total earnings for last year, it will be 10.7 times the number of shares that we use for the earnings per share. So earnings for last year will be what? 10.7 times the number of shares that we use, which is 7 million. What figure are you getting? Give it to me fast.
74,900,000.
70.
4,900,000.
Okay, 74 million
900.
900,000. Okay. So if we consider the bonus issue, what will now be our shares that we should use for last year? It would have been 8 million, isn't it? Divide this by 8 million and see something.
Nine point
9.36.
9 point what?
36.
Okay. So that is it. So you can do it like this, or you just find a bonus issue fraction. You can see that after we try to restate the bonus issue, we have 9.36. Even if you now consider the bonus issue, you still be getting the same figure. But this one, the question will not give you information about how you can get the earnings per share for last year divided by this one. No. So they will give you the earnings per share. Just find your bonus issue fraction. How do we find it? 1 is the full share that you have before you add the bonus issue. So 1 plus the manner in which the bonus issue was done. Then that particular fraction, you reciprocate it to have your...
Linus,
Yes.
when you say the manner in which the bonus share was done,
Yeah.
What do you mean?
It is the proportion, one for every 7. That is 1/7.
Mm-hmm.
Yes, that is what I'm saying.
And it said it is 1 plus 1/7.
That is a bonus issue fraction. If you want to find the total number of shares, straightforward, it will just be 1 plus 1/7, which is 8/7 times the 7 million. You get the 8 million straightforward. Rather than you doing 7 million separately, adding the bonus issue 1 million to it. Are you getting my argument now?
Okay, sir.
Yeah. So if you have calculator, sometimes if I'm talking, be punching the calculator. If you're not getting the answer before you be continue asking. All right.
So Linus,
Yeah.
this means that anytime you are told a bonus issue or something for something, what you are having should be the numerator, and what they are giving you should be the denominator, right?
What you are having is what?
I'm saying that in case in order to determine the fraction,
Okay.
I'm saying that what you are having or what you are bringing should always be the numerator, and
Yes.
what they are giving you, the new one, should be the denominator.
Okay. You want to memorize it like that, or I should
Yes,
explain
yes,
why it is like that?
Yes. No,
Okay.
I want to memorize it like that.
Okay.
If
Then
it's
that
like
is it.
that,
Then that is it.
okay.
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 But the issue over here is that they say bring 7 of your what? Your old shares. But you have 7 million.
Okay.
So if you have 7 million, they are saying that bring 7 of your old shares. It means that you bring 1 million of your old shares, isn't it?
Okay.
Then they will now give you 1. So you will now multiply this one by the new shares that will be giving you. So the total shares that you'll be having is 1 million.
Okay.
Which is the same as 1/7 times the shares that you have, which will still give you the 1 million.
The 1 million. Okay.
Are you okay? All right.
Okay. Thank you.
Let's move on to it's like the second what? Joyce.
Hello.
Yes.
I mean the 7.9/8. I don't know how you've got those figures, but it seems that one is very easy than this
So
assumption.
you are okay with multiplying by the bonus fraction. Are you okay with that one?
Please, that's what I said. You should come again. I'm not clear, but it seems that one is easier.
That one is easier, and it is easier. Okay. But this one, what we are saying is that you see the earnings per share for 2015 was what? 10.7, isn't it? How do we calculate earnings per share? Earnings per share is calculated as a profit after tax, all things being equal, divided by the number of shares that we have. So you can see that they have given us earnings per share. They have given us earnings per share to be 10.7. 10.7. And we don't know our profit. 10.7. And we don't know our profit. Is the profit the earnings for the year that we are looking for? But the shares used to calculate this in 2015 was 7 million, because they didn't consider the bonus issue before calculating the earnings per share. So that would be 7 million. So if you want to make the profit after tax the subject, then you multiply the earnings per share by the number of shares. So 10.7 times 7 million. That is how come we got the earnings attributable to ordinary shareholders, which is 7.9 million.
74,900,000.
It's 74 what?
74 million.
Hey. So who said the 7.779?
Because I did it and I wasn't getting the 96.36 pesos.
It's 749.
Yes, please.
Yeah, so the person who gave that answer is wrong. So, Auntie Joyce, if what you are thinking about is 749, then you are correct. All right. Let's move on to another one. Let's move on to bonus issue and issue at full market price combined.
Linus,
Yeah.
please do the changes for us, so that in case you share the Excel worksheet.
So this will be 749,000. Okay. Okay.
Yes, thank you.
All right.
It's 900.
Since there are some people they think that they are doing national maths and science quiz and they are using their brain. Okay, let's look at bonus issue and full market issue price combined. Okay, although we say that bonus issue, we don't consider time when it was done. But this is only done for shares that have been in existence from the beginning. Okay, assuming January 1, we have 100,000 shares. And July 1, we issue shares at a full market value of 10,000. Okay. August 1, we issue bonus issue of 1:2, which is 1/2. Okay. So 1/2, let me make it 1/2. All right. Okay. You see, let's look at this. If you want to look at the bonus issue will be full on the 100,000 because this 100,000 has been from the previous year up to this year, isn't it? So the bonus issue, the full year, the 100,000, which is the beginning, will take a full year bonus issue because it has been in issue from since. So the bonus issue will affect this one fully. But the one that we issue on July 2016, when are they going to start getting the bonus issue?
6 months time.
They will take it from 6 months. The bonus issue will start from six months. So although we say bonus issue is not time apportioned, but when a full market price issue was made before bonus issue, the bonus issue on the new issue will take effect from the time that those new issues were made. Because these years were not from the past. They started from July. So the bonus issue will affect them from July. So what will happen is that we are going to have 500,000 as a bonus issue, 50,000 as a bonus issue for January 1, because that has been there since. So the bonus issue will be full on it. That will be 150, or half of 100,000 is 50. But for this particular one, the bonus issue will be what? 5,000, isn't it? And the total shares at January should have been 15,000 plus the bonus issue. But these shares contributed to only 6 months. So if you want to find a weighted average number of shares, you are going to calculate only 6 months on this because this has only used 6 months. Bonus issue will start from the date that they have been issued, because they haven't been issued since. They haven't been issued from the start of the company or from the start of the year. So we can't say the bonus issue 5,000 will be for a full year, although we don't time apportion bonus issue. Bonus issue is only full on the shares that are in issue from the beginning. If you issue any shares subsequently before the bonus issue, it will take effect from the time that you issue those shares. So if you want to find the weighted average number of shares, what we are going to have is that the old shares will be 100,000 plus the bonus issue. That will give us 150,000. But the new issue, the new shares or issue will take only 6 months. The bonus issue, we're also going to proratize for 6 months, because the bonus issue, these shares that we are doing the bonus issue on, were not in issue from the beginning. They haven't been issued since. They are in issue from July. So the bonus issue will also take effect from July. So what we do is that it will be 15,000 times 6/12 for it. This is how we do it. If there's a bonus issue and this one combined. So this will now be 7,500 for this. Instead of us doing only 5,000, which is 10,000, the bonus issue will now be 5,000. So the bonus issue will also be in the first from July. Then we do 15,000, which is the total shares plus the bonus issue. Then we divide it by 2, which is 6 months. We have 7,500. So if you want to know your weighted average, it's 57,500, 157,500. This is how we do it when there is a bonus issue and a full market price combined. Any question before we move on to question? Can I move on?
Yeah, Linus, you can move on.
Okay. Let's look at example 1.
An entity had 1 million shares in issue on January 1, 2014. They issued 200,000 shares at market value on 1st April, followed by 5-for-1 bonus issue on 1st August, with a further 300,000 issued at market value on October 1. If profit for the year ended 31st December 2014 is 220,000, what is the basic earning per share?
Okay. They are saying everything over here. If a question gives both bonus issue and issue of shares at full market value, apply the bonus issue fraction from the start of the year up to the end of the bonus issue. Time apportion at the this thing will confuse you. So forget about them. Don't mind what they are saying. I'll teach you what to do.
Lano, don't say you are eating. Don't say
I'm not eating, I'm drinking.
What are you drinking? What are you drinking?
Yeah, taking some meat pie there.
I'm drinking water.
That's good. Can you enjoy yourself?
you water.
I'm drinking water. Let's move on.
Enjoy.
And you are chewing it.
Enjoy yourself.
Let's move on. So, example, an entity had 1 million shares in issue. Me, I'm just praying that we should finish this thing home. Charlie, the standards are plenty.
We are even tired. You are even tired, Charlie.
It is what? Me that I'm teaching, I'm not tired. You that you are going to write exam, you are tired. It is what?
No, I'm not talking about that. About today. I'm talking about these plenty things.
Oh, Charlie, you see? Okay, I don't want to say anything. Let's move on.
It's too plenty for us, you know.
Okay. But the
we'll
thing is, you just have to understand it. But if you want to memorize it, that is the problem.
Yeah.
If whatever I'm saying, just try to maybe just try to make sense out of it. That is all.
Okay.
Hey, why should this be done like this? Why should sometimes try to question how things are done? Maybe God will open your mind about how, why, and how they are doing it like that. Let's move on. So the entity had 1 million shares in issue on 1st July 2014. They issued 200,000 shares at a market value on 1st April, followed by 1-for-5 bonus issue on 1st August with a further 300,000 issue at a market value on October. If profit for the year ended is 220,000, what is the basic earnings per share? Okay, let's come here. What are the shares that the bonus issue is going to affect? It will be shares that were there before the bonus issue was done, isn't it? Shares that were issued after the bonus issue has nothing to do with the bonus issue because there hasn't been an issue before the bonus issue. Bonus issue are done on shares that were there before the bonus issue. So the 300,000 that they are talking about on October, it has nothing to do with the bonus issue. Bonus issue is done on existing shares, not shares that you are here to issue. No. So let's count to the earnings. What will be the earnings? What is the earnings for the year? 220,000. But the question is always about how you can get the weighted average number of shares. Okay. Okay. Let's count to the weighted average number of shares. The O shares, which is 1 million. O shares, which is 1 million. What will be the bonus issue on O shares, which is 1 million from the beginning? So
200,000.
let me just do it well so that we get it. It will be 1 million from the beginning plus the bonus issue, isn't it?
200,000.
Okay. So let me add the bonus issue to it plus the bonus issue, which is 1/5 times the 1 million. So what will be the total value?
1.2.
1.2 million. Okay. So the bonus issue has been applied on this one. So the new issue from April, what will be the bonus issue on it? What will be the bonus issue on it? 1/5 times
Wow.
200,000.
40,000.
That will give us 40,000. So the total number of shares will be what?
240,000.
But these shares have done how many months?
They've done 10 months.
10 months. Is it 10 or 9?
9.
9 months. So we multiply by 9. The bonus issue is going to take only 9 months. Are we okay? And what will be the shares?
$180,000.
180,000.
180,000.
180,000. Are we okay with that side?
Yes, sir.
Yeah.
From October, would the bonus issue affect this?
No.
No, because
No.
the shares has not, bonus issue is done on existing shares. So this is 300,000. This shares has done how many months?
3 months. October, November, December. 3.
Okay. So we multiply this by what? 3. And that will give us how many?
75,000.
75,000.
75,000.
Let's put all together.
$1,455,000.
Okay. 1/4. So this is the weighted average number of shares that we are going to use for the what? The earnings per share. You see, if you are looking through the ICA manual, they will be used. What they will do first is that the O shares, they will do it and use the bonus fraction 6/5 to multiply to this month to March. They will do it to April. Then they will now add the 200,000. Then they will add it to this 1 million. They will apply the bonus issue to also up to October. Then they will do something. Charlie, that thing is too long. It will confuse you. So just try to understand this one. The bonus issue, all the shares that were an issue from the beginning, the bonus issue will have a full effect on them. So calculate the bonus issue on it and add it. Put it there. What were the share issued? How many months have they done? The bonus issue affect them, but the bonus issue will also take the number of months that they have done to the year end. You do it. What were the shares that were issued after the bonus issue? The bonus issue will not affect them. Calculate the number of months that you have done. Add it together. I don't want to bother you. All right. So our earnings per share now, is equal to 200 what? 20,000 divided by 1,455,000. How much are we getting?
15.1.
15.1 GP, Ghana GP, pesos. All right. Okay, that is how we go about a bonus issue. But don't worry, you'll be fine. Let's look at right issue. Right issue. What happened with right issue is that the right issue, we are going to issue the shares. That is what Stefano says. Buy one and get one free. So we are going to take money, but just that the price that we are going to issue the shares will always be lower than the actual market value. It means that if we are issuing the shares at a price which is lesser than the actual market value, it means that we are giving them some kind of bonus. There's a bonus issue in the issue. So what we do is that we try to separate it. We try to separate what was the actual market issue and what was the bonus issue. The bonus issue, we are not going to time apportion it, but the actual issue, we are going to time apportion it. So we try to separate which portion was bonus issue and which portion was the actual issue. That's what we do. How do we calculate that? Right issue. Right issue are always made to the existing shareholders in the proportion of their ownership, but this is always done at a price lower than the market value of the shares. Why do we do this? We also do this not to what? Cause a dilution in the ownership. We don't want to bring in a new owners, which will make our ownership size bigger or something. So we do the bonus issue. We do the bonus issue. Right issues contribute additional resources and are normally priced below full market. They are issued at a discount. All right, let's move on. Therefore, they combine the characteristics of issue at full market price and bonus issues. Determining the weighted average number of shares, therefore, involve two steps as follows. Adjust for the bonus element in the right issue by multiplying capital in issue before the right issue by the following fraction. Don't mind them. This thing right they are saying right is bogus. It's bogus. What we do is that we find a proportion, or we find the fraction. We find a fraction which is called, this is how we find a fraction. It is a fraction that is going to help us to find the bonus issue, which is cum X price. The cum X price is the price of the shares before the right issue divided by theoretical X right price. Theoretical X right price. The theoretical X right price is the actual price of the shares after the right issue. So the only thing that we have to calculate over here is the theoretical X right price. Theoretical X right price is that after the bonus issue, what is now the value of our shares? What is now the value of our shares? Let me demonstrate something simple here. Let's assume that the right issue was 144, and our shares that we have in issue is 200,000 at a price of 5 cedi. So what will be the right issue shares? What will be the shares for the right issue? 144.
50,000.
It will be 50,000. Okay. So what is the value of our shares? What is the total value of our shares before the bonus, the right issue? It will be 200 times the 5 cedi, because each share is 5 cedis. That will give us what? 1 million. Am I correct?
Yes, please.
Yeah.
Okay. So right now we are issuing a right issue at a price of 3 cedi. What will now be the money that we'll be realizing from the right issue? That will give us 150,000. Am I correct?
Yes, 150,000.
Okay. What will now be the total value of the shares after the right issue?
1.150.
Okay. What will be the total number of shares now?
That would be 250,000.
250,000. Okay. If we now want to find our value per share, how are we going to find the value per share now?
1.150 over 250,000.
So 1150 divided by what? 250,000.
250,000.
How much are we getting?
4.6.
4 point what? 6.
4.6.
This 4.6 is the theoretical extra price that they are talking about. This is the value
Okay.
of the share after the right issue.
Okay.
That's what they are talking about. But mostly what we do is that we do it on unit basis. If I say unit basis, this is how we do it. Okay. How many of our O shares are we bringing? How many of our O shares are we bringing to take one new?
4.
4. And these shares, they are valued at how much?
5.
5
5
cedi.
cedi.
5,
So if you multiply, we are going to get 20, isn't it?
Yes.
20.
Yes,
Okay.
please.
How many shares are we taking from the new one?
1.
1.
1. They are valued at how much?
3
3.
3.
3 cedi. If you multiply, we get what?
3.
What is
Three.
the total unit price of the shares? 23, isn't it?
23.
23.
And what is the value of the shares now?
5.
5.
5.
So this will now be 23 divided by 5. What are you getting?
4.6.
4.6.
Same figure.
4.6. So you can do it on a total base. You can also do it on a unit base. But the unit base is the one that will come in the question. You can see that this example is on unit base. Okay. So okay, they have been asking us to calculate the theoretical extra price. And you can see that they have given you unit issues. They haven't given you the value, the total number of the shares that you have. They have given you unit. So what we do is that our theoretical extra market price over there will be, we are bringing 4 of our old shares for one new. So C makes a 144 right issues at 1.90 per share. The right price of 6 shares is 2 cedis. The right price is the price of the shares before the right issue. And that is the actual market value of the old shares. So we are bringing 4.
Linus, repeat yourself.
Okay. I'm saying that the right price is the market value of the shares before the right issue. And that is the actual value or actual market value of the old shares. But the 1.9 over there is the price for the right issue shares. That is, we are selling the shares that we are going to sell through the right issue. We are selling one at 1.90. But before this right issue, our shares were trading at 2 cedis. So it means that the 4 shares that we are bringing, we are trading at what? 2 cedis. Can we move on?
Yes, sir.
So we have 4 multiplied by 2 is 8. Okay, we are bringing 4 to take how many?
1.
I'm bringing
And
4
these
to take
1
1.
are valued at how much?
1.9.
1.9.
So if you multiply, we still have 1.9.
1.9.
So the total value will give us what?
9.9.
9.9.
9.9. And the value of the shares will be what?
5.
5. So the theoretical extra price now is equal to 9.9 divided by what?
5.
5.
5.
Okay. What are we getting?
1.98.
1.98.
8.
Okay. 1.98. Okay. So this is what we are talking about as a theoretical extra price. So what we do is that for us to know which portion of the shares we are for bonus or which portion of the shares we are not for bonus, we take the right price, which is 2 cedi. So 2 cedi divided by 1.98 multiplied by the shares that we have before the right issue to get a value of the shares now. So let's do that. Let's try this. Okay. Let's look at the example there.
And as example 2.
Let's look at example 2, isn't it?
Okay.
Okay, let's look at example 2. Example 1, we have done it, we are tired.
We should look at example 1 or 2.
We can look at both of them.
Okay, let me read example 1.
Okay.
A company issued 1 new share for every 2 existing shares held by way of right at 1.5 per share on July 1, 2016. Pre-issue market price was 3 cedis per share. Relevant information: profit attributable to equity shareholders for the year ended 31st December 2016 was 550,000, 2015 460,000. Number of equity shares in issues after 31st December 2016 was 1.2, and then 2015 was 800,000. Calculate the basic earning per share for the year ended 2016 with comparatives.
Okay. Okay. So what we have to do is that the first thing that you have to do is that you have to calculate your theoretical XY price. That is the first thing that you have to do. When was the bonus issue done? When was the right issue done? 1st July.
On 1st July.
Okay. So let's find our theoretical XY price first. That will give us, okay. How many of our O shares are we bringing?
2.
2. For at how much?
3.
3 series. So that will give us on total basis.
6 series.
That will be 6. We don't, it's not additional, it's multiplication. See. Okay. So how many shares are we taking? How many new shares are we taking?
1.
We're taking 1.
At how much?
1.5.
1.5. So if you multiply, what are we getting?
1.5.
1.5. So our total value will be what?
7.5.
7.5. And our total number of shares will be what?
3.
3. So our theoretical XY price now will be 7.5 divided by what? 3.
3.
How much are we getting?
2.5.
2.5. Okay. Okay. So for us to get the right issue fraction now, the right issue fraction is equal to the cum-D price. What was the cum-D price?
3 series.
3 series divided by the theoretical XY price.
1.5. 2.5.
All right.
$1.2.
1.2.
Okay. So what was the shares? What shares do we have there before we made the right issue? Don't be confused. The right issue is already added to what? To the 2016, because it's 1 for 2. So 1/2 times 800,000 is 400,000. If you add it to this one, you have the 1,200,000, isn't it?
Yes.
All right. So what were the shares that we have before the right issue? It will be the 800,000. So we now find the new shares. So the new shares will be equal to this fraction, 3/2.5 times the 800,000. The right issue will be made on the shares that were there before the right issue. All right. What are you getting?
960,000.
9 and what?
60,000.
60,000. That is very nice. It means that the shares has increased by what? How much?
160,000.
160,000. Are you okay? Okay. Let's now look at the shares that we will be getting from the right issue. What will be the value of the shares? It is the same ratio, 1 for 2. 1/2 times 800,000.
That's 400,000.
How much are we getting?
400,000.
Okay. 400,000. You see this 400,000? This 400,000, 160 of it is relating to bonus issue. So after you using this fraction to multiply this, it will now give you the new shares at the beginning. So if you find the difference between the new shares that you have and the one that you have at the beginning, the difference is the bonus issue element in the right issue.
Please
so the
come
160
again.
okay. If you use the cum diff over 2.5 to multiply the shares that you have before the right issue, that is telling you the total shares at the beginning of the year. That should have been the total shares at the beginning of the year. Okay. If that should be the total shares at the beginning of the year, it means that 160 of it is relating to a bonus issue. Because we have 800,000 at the beginning. Now they are saying that it's supposed to be 960. It means that there was a bonus issue of 160, which is the difference between the new and the one that we have at the beginning.
Okay.
Can I move on?
Yes.
Okay. But the total shares that we are getting from the right issue is what?
400,000.
So what number of shares we have for full market issue?
With 240,000.
240,000. Exactly. Because 400,000 was the total one. Out of this, 160 is for bonus issue. So the remaining one is the one that we sell for market. We sell to get money. So that is the one at the market value. All right. Let me also tell you this one. Okay. Let me also tell you this one. Where is my calculator? Okay. Look at this. What is a bonus fraction? What is the right issue fraction? It is 3 divided by 2.5, isn't it?
Yes.
Okay. It means that we have added 1 to something, because if we want to get the bonus issue fraction, we add 1 to the bonus fraction itself, isn't it? Okay. So it means that we have added 1 to something and we have gotten this. So just subtract 1 from this answer. Subtract 1 from that. What are you getting? You are getting 1 over 5. Is it 1 over 5?
Yes, 1 over 5.
The 1 over 5 is the bonus issue fraction. So use 1 over 5 to multiply 800,000 and see something.
Linus, you like confusing.
160,000.
100 and what?
60,000.
60,000. So the 160,000 is the bonus issue too. So you see, what I want to tell you is that after getting the right issue fraction, for you to know the bonus issue, just subtract 1 from the answer. And if you subtract 1, the 1 is the bonus issue fraction. So you can go ahead and multiply it on the shares that you have from the beginning. That will give you the bonus issue. Then you now come and subtract that particular value from the total bonus issue. So let's look at the less of 2 questions so that the confusion will settle. Let's move on.
But Linus, the question was saying that we should calculate the basic earning per share.
Yes, we are going there. We are going to look at the weighted average number of shares.
Okay.
Okay.
Right. So we'll do the old shares. The old shares, what will be the total value of the old shares now? 960,000, isn't it? 800,000 plus the bonus issue on it. The bonus issue, we don't time a portion. So it will be 800,000 plus the bonus issue, which is 160,000. Are we okay? Okay. Let's count to from July. From July, what will be the number of shares that we're going to have from July? From July, what will be the shares that we have there? The shares was 400,000, but 160 is relating to bonus issue. So we now have
240,000.
Multiply by how many months?
Multiply by 6.
So 6
over
over
12.
12. So what are we going to have?
120,000.
120,000. So what will be the total now?
1080.
1080. So this 1080 now is the weighted average number of shares that we have for 2016. And this is the value that we are going to use to do let me say it again. You see, after you getting the right issue fraction, multiply it by the shares that you have from the beginning. The value that you have gotten right now is the value at the beginning plus the bonus issue element. So the figure that we want to get now is the bonus issue element plus the shares that we have from the beginning. So we are now, if you do it, we are now having 960. It means that there was a bonus issue of 160. We don't time apportion bonus issue. So it will be as if it was from the beginning to the end. So if the right issue, the shares that we should be getting from the right issue is 400,000 and 160 of it is bonus issue, it means that 240 was issued at a full market value. And this is the 240 that we are going to time apportion. All right, let's look at earnings per share for 2016. What is the earnings for 2016? 550,000.
Yes.
Divided by 80,000. Can we move on? So what are we getting?
50.9.
50.9 pesos. Okay. But the bonus issue of 160 must also affect 2015, isn't it? The bonus issue, we assume that it has been in the issue since. So it will also affect 2015. So we have to recalculate our 2015 earnings per share, which will be 460 divided by 960, which is the shares that they have in issue plus the bonus element from the right issue. What are we having?
What is 7.9?
47.9. Okay. Okay. You see, mostly the question will not give you this information. The question will not give you this information. So the question will give you the earnings per share calculated for 2015. They will give you only that figure. So the question will give you the earnings per share calculated for 2016. Calculate the earnings per share, the earnings per share, assuming that there was no bonus issue for 2015. What figure are you going to get? 460 divided by 800. I'm getting 57.5. Am I correct?
Yes.
Okay.
Yes.
So they will give you this figure, only 57.5, and they'll ask you to do comparative. What you do is that you come and take your bonus issue fraction. But I say bonus issue, right issue fraction. It is 3 over 2.5, isn't it?
Yes.
So what you do is that you reciprocate it and multiply by the earnings per share given to you. So if you reciprocate it, this will give you 2.5 divided by 3. So multiply that by 2.5 by 3. 2.5 divided by 3. What are you getting?
47.9.
Okay. So sometimes they will not give you this one. But after you getting the right issue fraction, just change it upside down and use it to multiply the earnings per share that they have calculated before. Let's move on to question 2.
What time are we closing?
We are closing 7:30, but anything you have to do the diluted earnings per share. That is an area for corporate reporting people and these people. We solve one question. During the intervention, I'll put questions together and solve some questions so that we all get confused. Then we close.
And as you are tired, though.
Let's finish this. Let's finish this. Or if you say that I should postpone the corporate reporting class to tomorrow, me, I don't have any problem.
So you are going to continue to what time?
7:45 or 8 o'clock. We are solving only one question. And our foreign currency, then that is the end. Tomorrow we do consolidated cash flow tomorrow.
Class.
So this is a combined class, right?
Yes.
Hey, and we are only just 16 or 13 or 15. So.
But what we are doing, is it FR or CR?
It's both. Standards are for both CR and FR.
But this particular question we just solved, which of them is it likely to come?
You can count for any of them.
I see you do kill us, Linus.
Hey, it's not easy. Oh.
You are tired, cry.
You have to kill them.
Ah.
Charlie, is 15 marks. So do your ratio, do your ethics, do your specialized transaction, capital reorganization, or business valuation. Then the consolidation, I will show you one. You just go and add the figures. If you can't do the adjustment, if it's foreign translation, just translate it. Take the profit or loss, average, translate. Statement of financial position, go and translate closing rate. If you can draw net asset table, draw it. If you can calculate goodwill, calculate it. My brother, leave it. Go and do what you are sure that you can do. Then you get them.
Please help us. So this logical reasoning is not easy at all. What we are doing right now.
Yes, it's because you have made up your mind that it's difficult.
It's not difficult, but we are tired.
And
In
you
other
see,
words,
the things are plenty. You know, they are petty things, but they are a lot. So
okay.
you can't remember everything like that.
So in other words, let's just end here, continue with what.
Oh no, let's go on.
Okay.
Let's
let's
finish with the
continue.
time.
Let's finish question 2.
Yeah, let's go on.
Linus, let's close with question 2. Let's close with question 2.
Yeah, after the question 2, we have diluted earnings per share, which is only 2. This one is very simple.
So
the diluted is very
so
simple.
let's do that. Anna.
Okay, let's do the
Let's
question.
sacrifice it.
Let's do the question 2, then we come to the diluted earnings per share.
Okay.
Okay.
On 31st December 2015, the issued share capital of a company consisted of 4 million ordinary shares of 25 pesos each. On 1st July 2016, the company made a right issue in the proportion of 1-for-4 at 50 pesos per share, when the shares were quoted at 1.5. The profit after tax for the year ended 31st December 2016 was 425,000. The reported earning per share for the year ended 31st December 2015 was 8 Ghana pesos. Calculate the basic earning per share for the year ended 31st December, together with comparative for 2015 that will be presented in the 2016 financial statement.
Okay. So what was the share that they have in issue? What was the share that they have from the beginning first?
They had 4
4
million ordinary shares.
4 million. So let's name that one old shares. Old shares. Old shares will be 4 million. So okay. So now the first thing that we have to do, this is a right issue. So we have to calculate the right issue fraction, isn't it? So before we can calculate the right issue fraction, we first have to calculate the theoretical X right price. Okay. So on July, the company made a right issue in the proportion of 1 for what?
1-for-4.
1-for-4. At 50 pesos per share, when the shares were quoted at what? 1.15. So what is the old shares that we are bringing?
The old share we are bringing is 4. We are giving them 1 at 50 and then 4 at 1.5.
Exactly. I like that analysis. So the 4 are trading at what? 1.5, 1.15, isn't it? Okay. Let's multiply.
You get 6.
I'll get 6. Okay.
Oh no, wait, you don't get 6.
Okay.
You got 4.6.
So I'll get 4.6. 4.6. Then the new shares will now be 1. At how much?
50 pesos.
Which will be 0.5. So if you multiply, what are we getting? 0.5.
Yes.
Okay. Let's put them together. 5.1 and 5. So our theoretical XY price
1.02.
will now be equal to 5.1 divided by 5. How much are we getting?
1.02.
1.02.
Okay. Can we do it? Can we get it like a fraction? Okay, 1.02, no problem. Theoretical XY price is 1.02.
Yeah.
1.02. Okay. So we now have to find our right issue fraction. Right issue fraction will now be equal to the cum diff. What is the cum diff?
1.15.
1.15 divided by the theoretical, which is 1.02. Okay. Okay. So what we have to do is that we now have to come and find the O shares, the actual O shares that should have been there at the beginning of the year. Okay. So the O shares that should have been there at the beginning of the year would have been the right issue fraction multiplied by the shares that we have at the beginning, because bonus issue are always made on the shares at the beginning. So this will give us 1.15 divided by 1.02 multiplied by what?
4 million.
4 million. So what should have been the supposed figure that should have been there?
It should be 4,509,803.
Okay. I hope you are getting Desmos.
Let's run it to 804. Let's
So you
run
have
it to 804.
The right issue is 1.12.
1.12.
Is the right issue fraction.
It's supposed to be 1.12.
1.02.
No, the theoretical SY price is what?
That one is 1.02, and then the right issue fraction is 1.12.
Okay. Times 400. I'm coming in. So I'm getting 4509803.
Yes.
So let's make
run
it.
it to
Let's make it 04.
804. Yes.
Okay. 4509804. Are we there?
Yes.
Okay. So let's find the increase in the fraction. Let's find the increase in the shares now.
The increase is the 509,804.
So the increase is what? 509. 509,804 what? 4. And this is
Why
the
not?
what? This is
All
the
this for
bonus
how
issue.
many marks, sir?
This is the bonus what?
They are just on one mark. Oh.
So this is the bonus issue. This is the bonus issue, isn't it?
Yes.
All right.
Yes.
So let's now come to the right issue. What will be the shares that, what will be the actual shares that we'll be getting from the right issue? So let's calculate our work now. Our work, we have the old shares, which will be 4509804. These shares will be there for full year. They will do full year. Bonus issue,
Yes.
the formula will do full year. But the new issue now will be what? What is the right issue amount?
509. 509,824.
No, it will be 1 divided by 4 times 4 million.
1 divided by 4 times 4.
That will give us 1 million, isn't it?
Yes.
And out of that, 509,804 is bonus issue. What will be the remaining one?
$490.
490,196. 90196.
Okay, so it is this 490, which is relating to the actual market issue. So 490,196 0.9496. So they will do how many months? How many? How many?
They'll do 6/12.
So they do 6/12. 6/12 multiplied by that. What are we getting?
Two four five zero eight four.
245
098.
So let's add a 2.
And this thing is confusion.
You see, this one is the easiest one. If I should do what they are saying that we should do.
You get 4754902.
Okay. So we can now find our earnings per share for 2016, which will be 425 divided by this. You see, if you have right issue, the first thing that you have to do is that you have to find the right issue fraction. How do we find that? It is the Kundip X right price over the theoretical X right price. So the first thing that you have to do is the theoretical XY price. After getting it, then you divide it by the share price before the issue. Then that will give you the fraction. So what you do is that you use that fraction to multiply the shares that you have. That is now giving you the bonus issue fraction. That is not actually giving you the bonus issue fraction. So if you take that fraction, you multiply by the shares that you have. So this is supposed to be the total shares that you should have after the bonus issue, which is 4509804. So this is now the total value. It means that we have 4 million. The value is now increasing to this. The increment is the bonus issue. But the bonus issue was made from the right issue. So you have to find the actual shares that you'll be getting from the right issue, which is the 1/4 times 4 million. And that is giving you 1 million. If that is giving me 1 million, this is the right issue is comprising of both full market and bonus issue. If the bonus issue is 50980, so what is the full market issue now? That is the full market issue now you are going to pro rata based on the number of months. But the figure that you have gotten after multiplying by the right issue fraction will be the shares at the beginning of the year, which will do full year. So the only thing that you are going to pro rata is the shares left from the right issue after subtracting the bonus issue. Very simple.
Okay.
To you.
No, my brother. No, my brother. You see, okay, I can take it like the mind is exhausted.
Papa.
Let's
You
look
see,
at
for now, we are not getting it, but after we've gotten the video and we'll go over it, you see, everything will be clear.
So let's take 425,000 divided by our number of shares now, which is 4754902. So what would be our earnings per share? I'm getting 8.94.
That's correct.
Okay, so what will happen is that what we have to do, they say we should do comparative. So it means that we have to come in the earnings per share calculated for 2015, we have to come and restate it, taking into consideration the bonus issue. So what we do is that we take the figure that we have over there, which is 8 GP, multiplied by the reciprocation of the bonus of the right issue fraction, which will be 1.02 divided by 1.15. Earnings per share is equal to what?
7.09.
7.09. Okay, that will give us 7.1. You can see a 0.9, there is a 5 attached to it. So the 5 is equal to 5. You add 1 to the 9. Then the 9 will be 10. The 10 will count to the 0. So 7.1 GP. All right. So this is what we are saying. This is what we are saying. Let's just try and see whether it will go after we are watching the video. My number is there. If you have any issue, just WhatsApp me or call me. We will talk. Let's come to diluted earnings per share. Diluted earnings per share. If you are talking about diluted earnings per share, diluted earnings per share, what we are talking is that, you see, right now, what is our earnings per share? It is 7.1 GP. But something might happen in the future, which is going to make our earnings per share not to be 7.1 again, or something might happen in the future, which is going to increase our number of shares that we are currently using. We have only two things that will normally increase the shares in the future. The first one is if we have a convertible instrument, which we look at today, that is having the option of people converting it to equity shares in the future. It means that the bond that we have over here, which is both equity and debt, if people should convert it into the future, it means that the amount that they are going to convert will now increase our share value. So let's look at this. Let's assume that right now we have 200,000 convertible instruments, but they are saying that in 5 years' time, this will be converted at 100 cedis for every bond. 100 cedis for every bond. So in 2 years' time, what will be the number of equity shares that we are going to have if you try to convert this? Is it going to give us 2,000 shares? 100 cedis for every bond. So you bring 100 cedis for every bond and take one equity share. So it means that in the future, our shares will increase by 2,000. So the diluted earnings per share, we are just saying that what will happen in the future that is going to cause our earnings per share now to fall, or what will happen in the future that will cause a change in the ownership of the company structure, or a change or something that will happen that will cause a change in our number of shares that we are currently having. There are two things. It's either we have convertible bonds or preference shares that are potentially to be converted into equity shares, or we are also giving people warrant or share options. Warrant or share options. Those are the two. So if we are currently having 200,000 convertible bond, and they are saying that in 2 years' time, 100 of each bond will be converted to 1 CD of every equity share. So 100 out of 200 will be given for 1. So it is the same as 1/100 times the 200,000, which will give us 2,000 shares. It means that in the future, our existing ordinary shares will increase by 2,000. Another one is the share option. The share option What we are doing over here is that we are looking at the potential effects that this particular instrument have on our current earnings per share. If they have convertible instrument and it is convertible, what should have been the earnings per share at the time that they are going to convert it? That is what we are calculating today. Let's look at the share options. The share options are, maybe we look at share-based payment, where the company is going to give share options to employees to motivate them. What normally happens is that if you want people to take up their options, what you have to do is that you have to issue the shares to them below the market value. You have to issue the shares to them below the market value because it's an option. They can decide to exercise their right, or they can decide to not to take it. But they can only take it when the share price is favorable to them. So if you have share options, what normally happens is that the share options are always given at a price below the market value. So if the current price is now 4 cedis, and we are going to issue this thing to the people at a market value of 3 cedi. What is happening? We are giving them a discount of 1 cedi, isn't it?
Yes, please.
This discount is assumed to be seen as bonus issue.
Okay.
So the current market price is 4. You are giving them 3 cedis. It means that you have given them a bonus issue of 1 cedi, which you are not going to take any money for it. So since this will be done in the future, we don't have any problem with this. But the right issue, what will be the effect of the right issue? The right issue, the share option, the part that the company is not taking, which is the 1 cedi. What will be the effect of the 1 cedi? The 1 cedi will be seen as a bonus issue, which is going to have effect on the earnings per share today, because right issue are seen to be in existence since. So what we do is that if the option that we are giving to them is 20,000, we just find the bonus issue portion. So the bonus issue will be calculated as 1 divided by the total, which is 4, times the option, which will give us 5,000. So this 5,000 will be added to our number of shares that we are currently having, and we use it to calculate our diluted earnings per share. But for convertible instruments, what normally happens with convertible instruments is that currently we are paying interest on the instruments. So if the instrument is currently 200,000, we are paying interest of 10%. It means that each year we pay interest of what? 20,000, isn't it?
Yes.
So
Okay.
if we are now telling the people that they should convert this thing to equity shares, are we going to pay the 20,000 again?
No.
No,
No.
the 20,000 will now be savings. But this 20,000 will not be allowed to be deducted from profit before we charge tax, because the interest itself is tax deductible, is allowable for tax. You will subtract it from the profit before we charge tax. So since this will not be seen as a dividend, it means that it will not be allowable for tax. So what we do is that we take after tax of the interest. So if the tax rate is 30%, the figure that we are going to add to profit back, which is the interest savings, will be 70% of this, because we assume that we are paying tax of 30% on this. Then we use only 70% of this one, and we add this to the earnings for the year, because this particular interest will not be paid as interest again. So it's not a savings to us. So after tax savings will be added to the earnings, then the number of equity shares that they are going to convert it to will be added to the down of the number of shares that we have. Let's look at example, then we look at how we do that. Okay, let's look at this particular question. Example. Who is reading for us?
Where is the reader? Question
The reader is
number
done.
what?
Security, please take over.
Is it an example?
The example, just
Yeah.
example.
Okay.
A company
okay.
had
A company had 8.28 million shares in issue at the start of the year and made no new issue of shares during the year ended the 31st December 2014. But on that date, it had in issue 2,300,000 CDs convertible loan stock. I'm not saying it well. I'm using a phone, so I can't say it well.
Okay, let me go for a small. Can you see now?
Okay, let me take it again. The company had 8.28 million shares in issue at the start of the year and made no new issue of shares during the year ended 31st December 2014. But on that date, it had an issue 2,300,000 convertible loan stock 2016 to 2019. The loan stock carries an effective rate of 10%. Assume an income tax rate of 30%. The earning for the year were 2,208,000. This loan stock will be convertible into ordinary 1 cedis share as follows: 2016.
Okay.
90 1 Ghana cedi share for 100 cedis nominal value loan stock. 2017, 85 1 Ghana cedi shares for 100 nominal value loan stock. 2018, 81 cedi share for 100 nominal value stock loan stock, and 2019, 75 1 Ghana cedi shares for 100 nominal value loan stock. Calculate the fully what DEPS for the
Diluted
year
earnings per
ended.
share.
Okay, for the year ended 31st December 2014. And then the options and warrants to subscribe for shares.
No. Let's do the first one. This is the second part.
Okay.
Okay. How do we calculate earnings per share? It is the earnings for the year, isn't it? Earnings for the year, which is 2,208,000.
Okay.
Then what we do is that since this will be converted, we are going to have some interest savings. So the interest savings over here, we have to calculate the interest. So the loan stock carries an effective rate of 10%. So what is the value of the low interest now? What is the value?
It's 2,300,000.
So we are paying interest of 10% on it, isn't it?
Okay.
So how much will be that?
230,000.
230,000. That is
Yes.
overall but this interest will not be allowed for tax again. So we find after tax interest savings. The tax rate is how much?
30%.
So
30%.
after tax will give us what?
70.
70%. So we find 70% on this. So it will be 0.7. 0.7 multiplied by the 230,000.
161.
Okay. So all divided by what is the current ordinary shares that we have?
8.2 million.
8.28 million. 8.28.
8 million.
280,000.
280,000. Okay. Then if we convert this, it will increase the number of shares that we are going to have. But you can see that they have given you so many years, isn't it?
Yes.
What you are going to do as a rational being, you would like this thing to be converted earlier. So we look at the first one. If you are giving a range of years, pick the first one, pick the first year, or pick the year that will give you a favorable value. So you can see that the first one is 90, or pick the earlier possible year, which is the 2016. So the 2016, what they are saying is that 100 of every nominal loan value
Loan stock.
will be given to what? Will be given for 90 shares. So 100, bring 100 of that one and take what? 90 shares. So maybe it's 90 for 100. Let me put it like that. 90 for what? 100.
100.
90 for 100. So for us to calculate the number of shares, it will be calculated as 90 over
100.
Okay. Just I'm saying that when you are giving a range of years, just pick the year that will give you a favorable convention. So you can see that this is 90 is favorable. Or if you don't do that, just pick the first year. Just pick the first year. Always the first year is the one that is going to give you the favorable figure. You can see that you are having higher shares in the first year than all the years. So if
Yes.
you are giving range of the years, pick the first one. It is the first one that is always going to give you a higher favorable conversion term. So
Okay.
to be 90 over 100 times what?
2.3 million.
230,000.
230,000.
And that will give us how many shares?
207,000.
200 and what?
7,000.
So 207,000. The this thing is 2,300,000. No?
Yes.
So it's 2,070,000.
Okay.
Okay, 2,070,000.
70,000.
So this is the shares that will be given to them, isn't it? So if you give these shares to them, it means that our number of shares will also increase. So we come and add it. 270,000. 2,070,000 rather. So this is how we find the convertible one, diluted earnings per share. The interest that we are paying will not pay again if they convert the instrument to shares. So we have interest savings. That interest savings that we are going to calculate should be after tax interest savings, which is going to increase our earnings. But if they convert the shares, our shares that we currently have will also increase. So we find the shares that they are going to have if they want to convert. Then we add it to the shares that we already have. This is how we calculate the diluted earnings per share. It's very simple, like the earnings per share. All right. Let's look at share options.
Options and warrants to subscribe for shares.
Yes, share options. These things are options given to people to buy shares at some time in the future. But this is option. They can decide to exercise it or not. So if you want them to exercise it, you have to give them a share price that is lower than the actual share price. But the option, the only thing that we are going to do is that we wait until they pay for the shares before we can increase our shares. But what happened is that we are doing this at a price lower than what it should be. So we assume that the difference is a bonus issue. So we take the effect of the bonus issue on our current earnings. That is what we basically do. So let's pick the example.
Okay. On 1st January 2016, a company has On 1st January 2016, a company has 4 million ordinary shares in issue and issues options over another million shares. The profit after tax for the year attributable to ordinary shares is 500,000 cedis.
Okay.
During the year to 31st December 2016, the average fair value for ordinary share was 3 cedis, and the exercise price for the shares under option was 2 cedis. Calculate the fully diluted earning per share for the year ended 31st December 2016.
So you can see that we are giving a bonus issue of 1 cedi, isn't it?
Yes.
So if you are giving a bonus issue of 1 cedi, how many shares will be given in terms of the bonus issue? This is calculated as the bonus issue value, which is 1, isn't it?
Yes.
The bonus issue value is 1 divided by the total market price, which is 3.
Oh, yeah.
Multiplied by the number of shares that we are giving to them.
500,000.
That will give us 4 million. The 4 million is the shares that we are going to have. That is the option.
Okay. Okay, after 4 million.
No, a company has 1 million
4 million
shares in issue, and issue options over another million shares. So this will be 1 million.
Okay.
Okay. So the option is what? 1 million. Another million shares. So what will be the bonus issue now? What will be the bonus issue value?
Three.
Okay, let's just make it 2. 3. How many threes? The threes will be 6, isn't it?
Yeah.
Okay. So let's now calculate our diluted earnings per share. It's calculated as the earnings attributable because the issues will not bring any additional savings. So it will always be diluted when you are doing share options. So this will be divided by the shares that we have now, 4 million plus the bonus issue element, which is 33333. That is the diluted earnings per share. So we just calculate the part of the options that we are for bonus issue. We add it to the shares that we are currently having. So we take the earnings divided by the total. That is the diluted earnings per share. You can see that the diluted earnings per share is actually simple.
Linus.
Yeah.
Please, where did you get that 1/3 from?
I should do what?
Where did you get the 1/3 from?
Yes.
The 1/3, where did you get it from? The bonus issue, 1/3.
You see, the actual market price of the shares is what? 3 million, 3 cedi. But we are saying that they should exercise the right for what? 2 cedi.
So the difference
is the 1 cedi, which is the bonus issue. It means that we are giving the bonus issue of 1 cedi. So the shares would have been gotten at 3 cedi. So all the 1 million is 3 cedis. So you are getting 2. If you are buying 2 cedis, it means that you won't get all the 1 million shares because you are paying only 2 cedis. You won't get all the 1 million. So the portion that you will not get is the bonus issue, which is calculated as the difference between the actual market price and the exercise price divided by the actual market price times the options that is available to them. Are you okay? Let me solve one question, tutorial question, so that we we stop here.
Actually, not easy.
It is well.
Oh, it is well. It is well.
We'll get a pass mark and go away.
That is it. Okay, let's look at question 17.
Okay. The Lynx has 12 million ordinary shares and 4 million 5% convertible bonds in issue as at 31st December 2002. There have been no new issues of shares or bonds for several years. The bonds are convertible into ordinary shares in 2003 or 2004 at the following rates. At 30 shares for every 100 cedis of bonds if convertible at the 31st December 2003. At 25 shares for every 100 cedis of bonds if convertible at 31st December 2004. The following are outstanding share option on 400,000 shares, which can be exercised in future date at an exercise price of 25 cedis per share. The average market price of shares in the Lynx during 2003 was 40 cedis. Total earnings for the year to 31st December 2003 were 36 million. Taxes payable at a rate of 30% on profits required. Determine the diluted earning per share for the year ended 31st December 2003.
So diluted earnings per share is calculated as profit attributable to this one over the number of shares. It's the same thing that we do. So what we do is that you can see that we have convertible instrument at the same time share options.
Yes.
All right. They say the convertible instrument will be converted either 2003 or 2004. If you are the holder of this bond, when are you going to convert this?
2003.
That will be at 2003.
3, because it's giving you 30 shares, isn't it?
Yes.
All right. Let's look at the interest that we are paying on the bond first. What is the interest that we are paying?
5%.
It is 5% on the nominal value, which is 4 million. So let's find that 0.05 multiplied by 4 million. What will be the interest?
200,000.
200,000. But this interest is before tax, isn't it?
Okay.
So we are looking for
Okay.
after tax interest rate. So that would be 0.7, isn't it? 0.7 times the 200,000. What are we getting?
140,000.
So this 140,000 will now increase our what? Our profit, because we are saving it.
Profit.
We will not pay it again. So our profit will increase. 140,000, am I correct? Okay.
Yes.
All right. Let's come to the shares that they will have if they want to convert. What will be the shares that they will have?
30 over 100.
They are bringing 30 for 100, isn't it?
Yes.
So that will give us
Yes.
30 over 100 times the value. What value did they have?
12 million.
What's the value of the convertible instruments?
4 million.
4
4
million.
million.
So if you do this, what are we having?
1.2 million.
1.2 million. Okay. So we are done with the convertible. Let's come to share options now. What is the actual market value of the share option?
Oh,
It was what? Let's read it down.
25 CD.
No. Which can be exercised at a future date at an exercise price of 25 per share. That is the exercise price.
Okay.
Okay. The average market price
Average
of
market
shares.
price. Okay.
That will give us
40.
what?
40.
40. But we are giving them that they should buy the shares at how much?
25.
So what is the bonus element there? What is the bonus issue price?
That is
15.
5.
15.
That will give us 15.
15.
So if you want to find the shares in relation to the bonus issue, it will be 15 over 40 times the share options that we are giving them. What is the share option?
400.
400,000.
400,000.
Okay. So the bonus issue shares will be what?
$150,000.
150,000. Okay. So 150,000. 150,000 shares. Okay. So let's now find our total number of shares now. The shares that they have at the beginning is 12 million, isn't it?
Okay.
Yes.
And this will increase by the shares from the convertible instrument, which is 1,200,000.
Okay.
Okay. 1,200,000. And we are also doing bonus issue of what?
150,000.
150,000. So what will be the total value of the shares now?
$12,150,000. Oh.
1335.
Okay, 1335 by that. Okay. What is our profit for the year?
Yes. 360,000.
The profit for the year
36
is
million.
36 million.
36 million.
Okay.
The mind is tired.
But we are having some savings of what?
Interest.
We are going to have some interest savings of what?
140,000.
140,000. So what will be our total earnings now? 36,140. Am I correct?
Yes.
Yes.
So our earnings per share now is 36,140 divided by 133, 5,000, 50,000 rather. That is the earnings per share. Very simple. The diluted earnings per share. This one is very simple. What are we having?
2.71.
27. Okay, this one make it, since you are not having decimals, you are not having 0 point, just make it
2.71.
Yeah, 2.71 CD. You can only change it to pesos when it is 0.0 something. So this is what they're asking us to do. So okay, though from the beginning we have been saying that is this one, but the ending part will now put some. The ending part.
Problem is the right issue.
right
That's where we
issue.
are having the challenges.
Okay, don't worry. You go over it again. Maybe you'll get it. The right issue.
Okay.
What you do is that you see what they say over there. You see, if you look at the ICA manner, they have been using fraction. That fraction, I don't want to confuse you. Because you look at a fraction, you don't even know what they are saying.
Okay.
So the best way is that just find the right issue fraction. Apply it on the shares that they have at the beginning. So that should have been the shares at the beginning, including the bonus issue. So if you have the new share now, that is telling you that the shares over there is the shares that you have at the beginning plus the bonus issue. So find the difference. The difference will give you the bonus issue. The bonus issue was taken from the right issue. So you subtract the bonus issue from the right issue and time apportion the remaining shares of the right issue, which was issued at a full market value. So the right issue comes in two ways: bonus issue plus full market value. If you're able to separate the bonus issue, then you can at time apportion the market value. So that is the separation that we are doing. Ladies and gentlemen, we are done with any special. Thank you all for coming. I will take some questions from this place. This is a question that I will solve for you during the intervention, and the confusion will come. Question 8. That will be the last question that we solve.
All this.
Yes, question 8 and question 9.
And they were for how many marks?
No, these are SEMA questions.
Oh, okay.
These are SEMA questions. Me, I don't pick questions from ICC.
Hey, then you are raising the marking scheme bound.
No. The thing is, if you get the understanding from here before you go there, it will be very simple for you.
Okay.
And I see they pick the questions from somewhere. So
I'm picking from